high, and the other stocks as well. In fact, Marico is one of the stocks that is in focus, and that is reacting to earnings as well. So we'll just be chatting with the management as well in just a bit and talk about the numbers, the rural demand, and what's happening in the urban landscape as well. But if we talk about the stocks, some of them have recovered from the lows of the day, and we'll discuss that in greater detail. But as I said, Marico has reported a good set of second quarter numbers, largely in line with the estimates. To discuss the company's second quarter performance, we are now joined by Saugata Gupta, the MD and CEO of the company, joining us now. Mr. Gupta, thank you so much for joining in today, and festive greetings to you. Can you comment on the urban versus rural demand environment? Because other companies, they are speaking about urban slowdown. Do you see that trend happening for you as well?
I think over the last 2-3 quarters, we are seeing a slight improvement in rural consumption. Having said that, an urban which was doing very well, I think you need to bifurcate. At the top end, I think, and which is also driven a lot by e-commerce, quick commerce, and modern trade, we are not seeing any significant reduction in consumption. At the end of, but in the middle class, I think because of a combination of, I would say, food inflation and overall retail inflation, we are seeing some stress. Having said that, I think once the inflation goes away, I believe that it will recover. So I think if you look at our portfolio, especially the diversified part of the portfolio, which is the premium personal care and the digital brands, that caters to the masstige and the top end, and there we are not seeing any stress. But yes, in the middle, where mass food brands and some of the other, HPC brands, completely cater to, yes, there is some little bit of a stress.
Well, moving on, most important thing that the street is focusing on is the EBITDA margin. So what is the outlook for margins in H2? There's inflation that's being seen both in copra as well as palm oil prices.
We don't get impacted by palm oil. I think we are only impacted by other vegetable oil like rice bran and sunflower and obviously copra. There has been a price increase, a combination of the inflation in copra. Similarly, in our Saffola portfolio, there has been a duty hike, which has led to a 15% increase in input cost. We have taken price increases. We believe that at the end of the day, we want to maximize volume growth and revenue growth subject to a threshold level of margins. And as we indicated, we believe that there could be some, to the worst possible case of a 50 bips reduction in overall operating margin for the full year. But as you know, last year we had anyway peaked in operating margin. But I think what is most important, given the fact that we are seeing some improvement in rural, and historically, whenever there has been inflation, moderate inflation in copra, Parachute has tended to do better. We wanted to maximize revenue and the volume growth opportunity. So we will be looking at a sequential improvement in volume growth. We have done 3, 4, 5 last 3 quarters. We want to look at a further sequential improvement in volume growth.
Okay, there could be a sequential improvement in volume growth. So going forward, Mr. Gupta, what could the volume price mix be in the second half? Is double-digit revenue growth on cards?
Yeah, that's most certainly on the cards, given the price increases which we have taken in Parachute and Saffola. So I think we are pretty confident of delivering double-digit revenue growth. We'll also strive, although we have done around 7 and 8% in H1, we'll strive to ensure that we will attempt that can we do a double-digit revenue growth for the full year. And as I said, that we would be passing on some part of it, but it is extremely important that the consumer, given the fact that there's not exactly very strong tailwinds for consumption, we are careful about only taking calibrated price hikes.
Okay, so calibrated price hikes is what you're talking about. Now, moving to the food business, what are the margins of the food business currently? What are the margins expected by the end of FY25?
Food business makes much more margin than Saffola edible oil, and that's what we wanted to do. If you notice, we started this journey sometime in 2020 when we said that we will be aggressive in food growth. There are 3 components of the food business. The organic part is essentially driven by Saffola oats and masala oats. And then there is the part of Plix and True Elements. Last year, we did a kind of a pause in terms of growth, and we corrected the margins. The margin is when we had a significant improvement in margins of 800 basis points. So food today delivers a good margin. Obviously, as we scale up, the margins will improve. And we are extremely happy that this quarter we hit 1,000 ARR. We had set this as an aspiration FY20 that we will do that. So we have done 4x to 5x on foods, and we want to continue to grow foods by 25-30%. So if we look at the Saffola franchise today, 30% is food, 70% edible oils. Over the next 3 years, this number will be 50-50. And maybe 5 to 7 years from now, food will be bigger than Saffola edible oil in the Saffola master franchise.
Okay, all right. So that's about the food business. But tell us, what are the expected benefits of the revenue scale and margins via Project Setu?
Setu is a project to drive direct distribution. We believe that there is a significant opportunity in driving quality distribution in rural, which will improve assortment. We continue to believe that rural will be a source of, rural direct distribution will be a source of competitive advantage, and it is a entry barrier as far as, it protects and create moats for large FMCG companies. In the case of urban, it is going to aid diversification of the portfolio. We are under indexed in chemist, cosmetic, and food outlets. So going forward, and it's taking time, because anything which requires a complete change of operating model, it's taking time. Early signs are encouraging. We want to add 500,000 direct reach outlets in the next 3 years. So we believe this will lead to also help in diversification and also help in the urban, as you know, the urban GT distributors are in stress. This growth and expansion will help them in driving much more growth, because if you notice, a lot of food growth has been happening through OT when we started the journey some 5 years ago. It will also set the platform for selective distribution of our digital brands in GT. We believe in doing it carefully and not just spraying and praying in terms of distributing digital brands. There is a certain opportunity which we'll also exploit once this Setu distribution is in place.
Okay, all right, Mr. Gupta, thank you so much for joining in today with all those insights on the numbers for Q2 and most importantly, the outlook going forward. That's the word coming in from Marico. The stock is higher in trade, but it's time for a short break now. We'll be right back with Rahul Arora, Chairman and CEO of MPS, to discuss their Q2 numbers.